GM, Jen, everyone. This is Clément from Commit, and today I'm with Sveinn. Did it pronounce correctly?
It's correct, thank you.
Sveinn from Monerium. So you're the co-founder of Monerium. And my first question to you is, could you sell me Monerium in under 30 seconds?
Yeah, it's just real money on blockchains. Fully authorized, fully regulated, and linked to the major currency payment systems of Europe, SEPA. So you hold not stablecoin using Monerium, you'll hold the real euro that you can even use to pay your tax with.
Okay.
As one of our users did recently. And you can pay it straight into the bank account of the tax authority.
Perfect. Under 30 seconds. So Monerium is like real euro that can be on-chain. Perfect. Well, could you please introduce yourself and tell me more about you and what you do at Monerium, and then we'll go through the whole, the whole company and what you're building with the recent news about Gnosis Pay and all of this stuff.
Of course. So by background, I trained in physics and engineering, and the first company I helped start was at Stanford in '98, a biotech company, which by Stanford standards was a success, but very modest success compared to some other Stanford spin-outs. But I instead of staying in the US, I moved to Europe, and I've been in Europe since the late 90s, working for startups, investing, and then I was living in London because I lived in Iceland, but then I lived in London for 10 years, and I was living in London when on holiday in California in 2011, somebody asked me coincidentally, what do you think about Bitcoin? And I said, I have no clue. Let me get back to you. And a few months later, I had the opportunity to download the Satoshi client and start looking at the code. And there was almost no documentation except the white paper. But I was like, whoa, it hit something like a node. So, and I sent back to the person, email was like a one-liner. Bitcoin is dynamite waiting to be ignited. So that's how I got into crypto. And I was fortunate because I had background in, I've been around financial services, like as a summer intern in a couple of companies. I was fortunate enough, I took cryptography as a course at Stanford when I was there. I'd been messing around with all the technology that was relevant to Bitcoin, and I also understood, the big picture of the financial system. And then, but I also understood the limitations of Bitcoin, because Bitcoin is really, is a very abstruse and form of currency is really a chain of signatures. That's what it is. So you can't really, and currency is a very sticky phenomenon. And in modern developed societies, currency is really something that's imposed by government. It's why it's called fiat. It's just created out of nothing. And it's for a reason, because it's a standard that is used to exchange value between people and entities, legal entities, and also across time. So it makes sense for the government to define what standard to use. And it's a sticky, and you can use, the government money is the same money that you pay your taxes with. And it's also a very sticky phenomenon in people's minds, because people are used to thinking about value in terms of whatever currency they mostly transact in. So it was always also obvious to me that Bitcoin would have a hard time gaining mainstream adoption in payments. So when Ethereum came out, I met Vitalik at one of the early Bitcoin conferences, and I took note when Ethereum was launched, and together with a friend who was then a part of the board of governors he was chairing the board of governors of the Central Bank of Iceland. We did a report on the relevance of blockchains for mainstream financial services, because we sort of believed in Vitalik's vision of tokenizing assets. We think, this could be a great way of disintermediating or creating an alternative to the current financial system, which is, very sluggish, inefficient. So it makes sense to, tokenize assets, put them on chain, peer-to-peer transaction. Wow. But we also, our conclusion of a report was, this is like May 2016, was that the key dependency for mainstream adoption would always be a reliable form of fiat currency on chain, like regular money, dollar, euro, sterling, what have you. And so then in 2017, together with two other co-founders, we started about exploring how to issue money on chain. And we did our first, then we started Monerium in its present form. We raised some outside money, friends and families, and angels, as it were, some of our own. And then our first hire was a lawyer, and we started due diligencing the major jurisdictions for the appropriate form of regulation, because our view was always that money has to live inside a regulatory umbrella of a major jurisdiction. Financial services, our premise is that financial services are regulated, need to be regulated, will always be regulated, and the debate should just be about how they should be regulated. But looking at America, Singapore, America, both the United States and Canada, and then Europe, and a couple of other jurisdictions, we came across this brilliant form of license in Europe called electronic money. In our view, that's the ultimate stablecoin regulation, because it's been around since 2000. It's like It's been a secret hiding in plain sight in Europe. It's been used by dozens of companies. It's been used by the likes of PayPal, TransferWise, and Revolut to build their businesses. And what it really is, it is supposed to serve as a digital alternative to cash. So we couldn't believe our luck. We found in our home jurisdiction, Iceland, which is part of the European Economic Area, so affiliated with
but not union. For the one that don't know how it works, you're from the economic area, but not union.
We're part of the four freedoms. That's what's important. So we adopt the relevant directives from the EU. So we're under the EU regulatory umbrella, and So when we shopped around for regulators and we looked at some of the Nordics, briefly at the FCA in the UK, but then our home regulator was quite receptive. After a few introductory meetings, they turned out to be, whoa, okay, this is cool. They said, we understand that because the electronic money directive specifically says that electronic money should be technically neutral. And so it started off as prepaid cards, and then it started being used online. And then it started being used in mobile wallets. And they said, okay, we understand. This blockchain thing is just means you have the electronic money, but issued as a token on chain. So it's the same financial product, essentially, right?
Yeah.
So they were receptive to our application. We applied in like the late winter, early spring 2018. About a year later, we were granted the license. And about 14th of June 2019, we became the first company authorized to issue fiat stablecoin, aka electronic money, on blockchain. Arguably, we're the first company in the world to do it properly.
Okay.
Now,
before Tether or Cycle?
No, we started around the same time as Tether. So we followed and we observed Tether from a distance. They started trying to use the Bitcoin stack. It didn't work, of course.
Yeah.
Then they moved over to Ethereum, which has worked, of course. But they are totally outside the regulatory umbrella of a major jurisdiction. Yeah. And that was, and they've scaled phenomenally during COVID in particular. But in our view, it will be very difficult to retrofit that business model onto mainstream businesses in major jurisdictions. So bless them for whatever they've been doing, pioneering money on blockchains outside the regulatory umbrella. That was never our view. We were always inside. And we observed Circle. Circle, of course, started doing something completely different, like Bitcoin as a form of payments, the OTC trading Bitcoin. And then they pivoted to money on blockchain, stablecoin. But they pivoted based on US licenses, which are not supposed to work for holding other people's money. They used money transmitter licenses that are state by state. They're non-homogeneous in the United States. They're not issued at the federal level. And so they were, and as they themselves now have discovered and admitted, they built their business on the wrong form of regulations in the US. I mean, when Jeremy Allaire calls in public for Congress to act, you know that they have failed to, essentially be regulated in the proper way. Bless them for their endeavors, but they didn't comply in the right way. In the US, Paxos, however, I think they tried a sounder approach using trust-based licenses, which are intended to hold other people's money as opposed to sending it, like the money transmitter licenses. And so they started as a New York-based trust, and now I believe they have a federal trust license. So I think that's a sounder way, but America has discovered essentially that it has nothing comparable to, no, it has no regulation for stablecoin, and it has nothing compared to what Europe has. What Europe has is electronic money, which is essentially stablecoin. It's the perfect stablecoin reg in our view.
So I got so many questions about that.
That's okay.
Well, and they are all like, I mean, as you give me like lots of insights. I don't know which one to start now, but
let me add one thing though.
Yeah.
During COVID, we're doing closed beta trials. We were using dollars, sterling, euros, of course, and Icelandic krona, testing all kinds of services, how to settle tokenized assets on chain, starting with in partnership with Tradeshift, which is a Danish company in supply chain services.
Yeah.
We started trying to settle invoices on chain using regular currency, factoring, meaning borrowing against invoices on chain using regular currency. So what we did with Tradeshift is pioneer use cases for tokenized assets, mainstream assets like invoices in particular. And we discovered also that the onboarding and the on-ramping and off-ramping was really flawed. We didn't really believe in this experience. We believed that, okay, so like Satoshi said, peer-to-peer, there should be disintermediation, should be the most direct route between the money in the bank and the blockchain.
Yeah.
And to us, we discovered, well, okay, Europe has this brilliant payment system called SEPA, which is relatively modern. And the main currency of Europe, the euro, is essentially powered by SEPA. So why don't we go and build a connection between SEPA and blockchain, between SEPA and that's what we did during COVID. So we hunkered down during the negative interest rates for euros and just built this. My dev colleagues did a fantastic job of getting this up and running. So we have a bridge or a seamless. We have fiat on chain, but which is the URI, so the first authorized regulated fiat stablecoin in Europe. Okay, and in the world, but what we also have, we built this direct connection between the banking system of Europe, which holds 11 trillion euros worth of cash, and Web3. So you can transfer your money seamlessly using our service between a bank account and blockchain. And back, you can transfer it as seamlessly as if you were moving money inside the system between two banks.
Okay. Okay, great. Well, let me ask the first question. Isn't it weird that a country outside of the European, that doesn't use the euro, actually, isn't it weird that you are building a currency that you don't use on a daily basis?
No, not really. I mean, some ideas, they just happen in places and where they're not meant to be implemented necessarily. I mean, we use our own currency, but we're inside the four freedoms. But what was really interesting is that we had a team that covered the range of skills that was needed to implement this idea. We had my colleague who was a former chair of the Central Bank of Iceland.
Yeah.
Other two colleagues who had built a cloud services business serving international customers from inside Iceland. So we had the skills. We just happened to be based in Iceland. And what was key, however, I think, with respect to the Icelandic location, because we talked to a few regulators in Europe before presenting or submitting our application in Iceland, is that the regulator in Iceland was quick to realize that that we were applying under a license that was really intended to serve blockchains. In the same way that it served magnetic prepaid cards, mobile wallets, and all that. I think there was nothing special about Iceland per se, but what was special really is that the team had the range of skills needed to, number one, understand how the business was supposed to function as a regulated financial services business. Number two, build the sort of IT part of the product as well. But also the regulators, the counterparty at the other side that had to approve our application, they had the skills to understand and the trust to give us this pioneering license at the time. I have full respect for these people who obviously had to work hard also, on their end to try to come to grasps with the relevance of what we're doing. And I based on the feedback we got from other regulators in Europe at the time, I don't think many other regulators would have been receptive to an application like ours. The FCA in the UK had just started thinking about this at the time. The FCA in the UK was probably the other regulator in Europe where we would have applied at the time.
And would you say that, when you build it outside, if I say so, even if it's not like really accurate, but you build it outside the Europe, would you say that it was easier to build something thanks to the Icelandic regulator to build a digital currency, or it did not change anything to you?
You guys use Google in France, right?
Yeah.
But it's built outside of France.
Yeah.
Okay. Use Facebook in France. Built outside of France.
Yeah.
Instagram.
Yeah.
Yeah, okay. So where do I stop?
No, but would you say that the regulator was more had more facilities, was more helpful to you rather than the French regulator, for example? Because in France, the regulator is really he has some views on the technology, on everything happening. There is something in France called le principe de précaution, which means that when something is going to be launched, if we don't know what could happen, then it shouldn't be launched. And that makes the innovation in France, for example, so difficult, in my opinion.
No, I'm sure, because I don't know all the 27 European Union member states that well. I know some of them better than others. We sort of touched upon we made sort of inquiries in the Baltics and the Nordics, and not much so in continental Europe. But I would have thought under these circumstances that the regulators in a major financial hub would have been the most skilled at evaluating our application. And for me, the fallback was always the FCA in London at the time.
Okay.
So with France, I understand that financial services need to evolve in a way that is, shall we say, that doesn't present risk, systemic risk in particular, to the general population. Iceland we went all through a global financial crisis in 2008.
Yes.
And Iceland was the epicenter of that. So what happened, however, after 2008 in Iceland is that the regulator had to be rebuilt, just like the banks, just to tackle the very difficult situation with both financial issues and technical issues that came about because of the crash. So the regulator, when we engaged with them first, they were actually starting to get past that, but they still had very qualified people who were interested enough to engage with us and able to engage with us in a way that they could, make an objective decision to grant us the license. And license is always some matter of trust. It's not something that you can go and claim, right? Because it's at the discretion of the regulator. So one thing is to get a license, and the other is to maintain it. But I have massive respect for the people who are inside the system. And I don't really know how the French regulators are in their thinking, but they, of course, must be mindful of not authorizing anything that could be detrimental to consumers or companies.
Definitely. So you're saying on your website that the EUR is over collateralized.
Yes.
By 102%.
Yes.
Tell me more about that.
No, that's just like the e-money you hold with PayPal from Luxembourg or from TransferWise it's the same standard. You see, it is the European e-money is like a standard for stablecoins, for fiat stablecoins.
Yeah.
And as long as you can meet the obligations of the standard, the requirements of the standards, then you can issue the e-money. So it's number one, it has to be over collateralized by at least 2%.
Okay.
So it's 102%. Number two, you can safeguard only with either banks or directly in high quality liquid assets. So you can put the e-money into a bank account, or you can put it directly into high quality liquid instruments. Our policy is to put as much as we can into high quality liquid assets. We safeguard with State Street in Europe in AAA securities which have maturity less than 180 days.
Okay.
So which lowers risk considerably. And then they have to be safeguarded in segregated accounts, which means the e-money is kept separate from our other assets. It's your money, legally speaking. So if something happens to us, whoever needs to wind up the estate goes directly first to the e-money and pays it out ahead of all other claims.
Okay, so at any time I can redeem €1 for €1. Anytime.
Yes.
Okay. Well, you're aware of that in case of bankruptcy, your money in Europe is, you can redeem, you know where I'm going with that probably. But if your bank, is going bankruptcy, the states could cover you up to €100,000.
We had to deal with all those issues in Iceland after 2008.
Okay.
I was living in London, but my friend, the central banker, who was my co-founder also at Monerium, he got me involved in John, he got me involved in activism in Iceland because we had an issue where one of the banks had collected deposits in Iceland and in the EU, but the deposit insurance scheme in Iceland was unable to meet the guarantee. Okay.
Yeah.
So there was a demand by some European nations at the time, particularly Britain and the Netherlands and the EU, that Icelandic state guarantee what was missing from the deposit insurance fund. And this became a big issue in Iceland. Our government capitulated and agreed to do this, which would have caused a lot of financial hardship in Iceland over many, many years. But the Icelandic constitution, the president can refer major issues like legislation and international treaties to a popular vote. So there were 2 referenda in Iceland on this issue, and I was part of the activist group that in the second referendum, where there was a considerably improved treaty, but fundamentally flawed treaty, put to the public vote. We lobbied against the government guarantee in bank deposits. And that actually has its basis in the European law. The European law says that deposit insurance schemes do not need or should not be guaranteed by the state if they're implemented in the right way. But what it also revealed is that these deposit insurance is inadequate in major crises because it's just not enough. Whatever fraction of a percent you pay indirectly into the deposit insurance scheme in whatever country you are, it's just not enough in a major catastrophe. Out of that whole, this was called the IceSave issue, IceSave dispute. And eventually it was resolved in a court in Brussels, which said essentially Iceland, the voters in Iceland voted the right way. It was unlawful of the EU and the Britain and the Netherlands to demand a taxpayer guarantee of bank deposits because the insurance deposit scheme was in place, but it just happened to be inadequate. But it was inadequate not because of Iceland, because of the European rules are inadequate. And after that, all the bail-in thinking came about, and Europe decided to set up these bail-in regimes, which essentially covered depositors in much better ways above and beyond the deposit insurance. So deposit insurance, a lot of people think they're covered by deposit insurance. They are in some circumstances, but not all. E-money, on the other hand, and deposits. Remember, deposits are a claim on the bank.
Yes.
So it's a claim on all the blob of underlying assets. Okay. Whenever a bank goes bust. But so e-money has different properties. It's protected by the 2% over collateralization, but it's also protected because it's your money, legally speaking. It's not a claim on us. It is a segregated assets, and you have a direct priority claim on them if something happens to us.
So it means that it cannot depict at any time.
No, that's not true. Nothing is safe 100% in life, but it's simpler solution. It's in our view, it's the safest, simplest way of safeguarding other people's money in a major jurisdiction. But the safest way would be for us to be able to safeguard the e-money directly with the central bank. And there's now actually discussion of how e-money companies could do that.
Yeah.
And there's even discussion like in places like the IMF and also within the European community. So that would be the safest way, that we would just hold your money directly with the IMF. But of course, there's always, there's no perfect safety anywhere, but to the best of my knowledge, there's even if e-money has been around for 20 something years in the EU, and there's never been a circumstance where people holding e-money have not gotten their full amount back in any difficulty.
So far, no.
So far, no. Yeah. Touch wood.
Yes, definitely. I know that people usually don't like to talk about their competitors, but I want to talk about your competitors. Tether, for example, they brag that for each USDT, on the blockchain, they have the equivalent in a safe, something like that, which I don't trust, honestly, because regarding the amounts of USDT on circulation and what they should have in a bank account or something like that, they never really disclose the real money they had. So for you, the EURE, which is on the blockchain, is the EURE of the people. I mean, their money. So you don't print like more money than you have.
No, exactly, and we have to undergo regular annual audits by an auditor. So we come from, this is like, e-money is like a TradFi product that we are positioning for Web3, but it's like a very robust TradFi product to represent cash. It's the best way to represent cash that we believe. And so we're positioning for Web3. So the checks that we have from the TradFi sort of regulatory umbrella is that we have to have annual audits, and we have to have regular submissions to the regulator about how much we safeguard and how much we have issued and how much regulatory capital we have. So this is the TradFi way of being compliant. But we believe also in more transparency. So we believe that, you know, some of these attestations, which have been some of these stablecoin issuers have started providing, I think they're very, very wholesome and good for the community. So it's on a roadmap to start providing regular attestations, which is also done in some parts of TradFi, like in mutual funds in the United States. They provide always quarterly updates of their holdings. European UCITS funds do something similar. You can have a breakdown if you go to a UCITS fund and see what's the underlying asset, right? So we believe of combining the best of transparency from TradFi and DeFi and making our product as transparent to the user as possible.
Okay. Awesome. I got two major topics before we get to the end of this podcast, which is honestly far beyond my expectations. So I mean, it's really great. This is the first time I talk about regulation and stuff like that. We always talk about like degen stuff, but this is the first time we have a really healthy and also important chat. The first one will be about the regulation. So what do you think about CBDC?
I don't think they'll happen.
You
They're
don't think
bad idea that will never happen. Because, okay, So back before the internet, did you ever go to a central bank to deposit your money or withdraw?
Well, before the internet, I was 10.
Okay, but imagine your parents before the internet.
Yeah.
Did they ever go to a central bank to deposit?
No.
No. Okay, exactly. So central banks are not set up to serve regular people and regular companies.
So you don't trust that?
No. They're central banks are set up to serve regulated financial institutions, and sometimes, some cases, supervise them. So by issuing CBDC directly to the public, central banks would be essentially breaking their current mandates. They would be competing with the institutions that they're supposed to serve and regulate. And they would be centralizing the financial services, which I think is bad for competition, bad for innovation. So I think it's a horribly bad idea, and people should just stop thinking about it. The much better and natural idea and logical extension of the current banking system would be for central banks to start supporting e-money issuers like Monerium in the same way they support the banks, by giving them access to deposit facilities and payments facilities directly and not through the banks.
Yeah. But for example, we already have the electronic yuan. Don't you think that this is too tempting for the states? It's okay. It sounds like a little bit like conspiracy, but don't you think it's too tempting for the states to have a money that you can control at any time, anywhere, and for some reason that you want to pay something, but you have a credit score, and for some reason that your card won't work because the state froze your money.
Yeah, China has a very difficult political system, different political system to Europe and the Americas and much of the rest of the world. I don't think we should look to China for anything in financial services.
No, definitely.
Except perhaps some part of the technology. I think we should look at the European model, which has been fundamentally based on open banking and essentially encouraging decentralization in financial services over the past 20 years or so. Various types of regulations, like the e-money license, like like having independent payment service providers. So I think we should be encouraging decentralization in financial services, and Europe has actually been very good at that for the past 20 years.
Okay, that's fine. And so this is my last. This is the last topic and my last question. So Gnosis Pay announced yesterday they are launching their own debit card on Gnosis chain, obviously. And I heard that there will be a company behind that working with them. Could you elaborate on this partnership with?
Builds on strengths of all sides in this partnership, from the technology providers to Visa, traditional financial service providers, to Gnosis Safe, which is the most trusted wallet on chain in many respects. So our contribution there is to provide the regulated authorized euro on chain that people can use to settle a payment at a Visa terminal, essentially worldwide, because we can issue euros, but they can travel to. We have to onboard customers directly, and we have to redeem to. We can only issue and redeem to customers that we've onboarded directly, but they can pass our euros on chain to whoever, and so it's because it's a bearer instrument, unlike a bank deposit. It can move freely like cash, right?
Yeah.
So whoever holds euro issued by us, the EURI, in their Gnosis Safe and has this card can use it to pay at a terminal wherever they like. They themselves, of course, have to be onboarded by the issuer of the card, right?
Yeah.
Which is Gnosis Pay, right? So it's all inside the compliance of the regulatory scheme. But our strength in this wonderful brilliant project is to provide the authorized regulated euro on chain, which can the user can use to pay the bill, and merchant can then hold on chain or redeem straight to the bank or transfer straight to the bank. So this opens up from the merchant side also the possibility to start using Safe as their main financial app. And Safe is so beautifully constructed, it's so modular, it's so composable. It frees the end users, the merchants, and the consumers on the other side from the constraints of the modern financial closed walled garden proprietary API apps.
Yeah.
This unbundles everything and is in the spirit of DeFi. And I think, you just can't be bullish enough on DeFi in this respect. This is just a very simple, beautifully crafted use case which shows how the world can be. No more walled gardens, just open APIs, open standards, and composable services.
Okay, so you're also bullish on the new stablecoins, the one from Curve, for example, or the Go from Aave?
I don't really want to comment on any specific protocols because people just come. I don't want to seem to be endorsed, but there's so much interesting experimentation in this space. And that's the whole point of DeFi. DeFi is open standards, permissionless innovation on the internet, unlike the closed proprietary interfaces of modern TradFi. It's still the early days. It is barely hitting mainstream yet, but there's a big, massive wave of real world assets and real world use cases coming online, which will just put, the cryptocurrency speculation is always going to be there, but it will become such a small subset of everything else in the future, in our view, that DeFi has just begun.
Great. Thank you very much, Sveinn.
Thank you very much, Clément.
Yeah.
Merci beaucoup, monsieur.
Merci.
Ah, chills. Literal chills.